Hi there and welcome. We're about to jump into a topic that honestly could put a fair bit of cash right back into your bank account. We're talking about claiming tax relief on your business mileage. And just so you know, we've put this whole guide together with the brilliant tax experts over at My Tax Accountant to make sure every detail is spot on. Right, let's get into it. Okay, let's start with a really simple question. Do you use your own car for work? I'm talking about any kind of business journey, visiting clients, heading to different sites, maybe even just running errands for the company. If you just thought, yeah, I do that, then you need to listen up because there's a very real chance you're leaving money on the table. Just look at that number, 2,600 pounds. Now, that is not just some random figure we've plucked out of the air. That's a real-world example of the potential tax relief a freelancer could claim after driving 12,000 business miles in a single year, even after getting some money back from their clients. That is a huge chunk of change, right? Let's make sure you don't miss out on what you're owed. So how do you get this money back? Well, the key to all of this is something called Mileage Allowance Relief, or MAR, as we'll call it. Think of it as the tool that unlocks those tax savings you deserve for using your own car. All right, so what on earth is Mileage Allowance Relief? In a nutshell, it's HMRC's way of saying, hey, we know it costs you money to use your own vehicle for work. It's a tax relief that basically lowers your overall tax bill. And it's for pretty much everyone, employees, self-employed folks who use their own car, van, motorbike, or even their bicycle for work and aren't getting the full approved amount back from their boss or clients. Okay, these are the numbers you really need to know. These are the official HMRC-approved rates for the 2025 to 26 tax year. For cars and vans, and this is the big one, it's 45p a mile for the first 10,000 miles you drive for business in a year. Anything over that, and the rate drops to 25p. Getting this two-tier system right is absolutely key to calculating what you're owed. And here's a brilliant little pro tip that's going to save you a world of pain. You're probably thinking, right, I need to start hoarding all my petrol receipts. Well, you don't. The beauty of this system is that the 45p rate is designed to cover the whole shebang, not just fuel, but also wear and tear, insurance, even your vehicle tax and MOT. So you can ditch the shoebox full of crumpled receipts. The one thing you do need, and this is crucial, is a really good mileage log. Okay, so you know the what and you know the rates. Now for the how. Let's get right into the practical side of things and look at the simple three-step process for making your claim. Honestly, it really does boil down to just three things. 1, keeping good records. 2, doing a simple calculation. And 3, putting that claim in correctly. It's that straightforward. So let's break down each one by one. Right, step 1, your records. And I can't stress this enough. This bit is non-negotiable. Think of your mileage log as your evidence. If HMRC ever asks, this is what you'll show them. So for every single trip, you've got to have the date, the start and end postcodes, why you made the trip, like meeting with client Smith, and obviously the number of miles. And look, don't just take my word for it. HMRC's own guidance is really clear here. They expect you to be able to prove the details. Just guessing, oh, I probably did about 500 miles last quarter, that's just not going to fly if they ever decide to look into your claim. You've got to be specific. A simple spreadsheet or an app can make this super easy. Okay, with your records sorted, we're on to step 2, the maths. And don't worry, it's pretty simple. To make it super clear, let's walk through an example. Let's meet Aisha. She's a freelance graphic designer in London, and last tax year, she clocked up 12,000 business miles driving all over the place to see her clients. So how do we work out her claim? Easy. First, we take her first 10,000 miles, and we multiply that by 45p. That gives us 4,500 pounds. Then, she's got another 2,000 miles left over, right? We multiply those by the lower 25p rate, which gives us another 500 quid. Add them together, and boom. Her total claimable allowance is 5,000 pounds. That's the number she can use to reduce her tax bill. All right, the final piece of the puzzle. Step 3, actually claiming the money. You've done the hard work, you've kept your log, you've got your magic number. So where does it actually go? Well, it all comes down to how much your total expenses are for the year. And this is a really important fork in the road, so pay close attention. There's a key number here, 2,500 pounds. If your total expenses are under that amount and you're not already doing a tax return, you can just use a form called a P87. Simple. But if your expenses are over 2,500 pounds, like Aisha's were, then you have to, no way around it, register for self-assessment and file a proper tax return. For those of you who do need to find a self-assessment, here's exactly where to look. When you get to the employment expenses part of the return, you're looking for box 17. It's the one for business travel and subsistence expenses. Pop your total figure in there. See? Knowing the exact box number makes it so much less daunting. Okay, we've gone through the whole process, but please stay with me because this next part is crucial. This is where people trip up all the time, and avoiding these simple mistakes can save you a massive headache down the line. So let's quickly run through the top 4 mistakes. Number 1, trying to claim your regular commute to your main place of work. You just can't do it. HMRC says that's personal. Number 2, forgetting to drop down to the 25p rate once you pass that 10,000-mile mark. Third, and we've covered this, just relying on fuel receipts. Not good enough. And finally, trying to claim for a journey that's mixed business and pleasure. If you stop off at the shops on the way home, you can only claim the pure business part of that trip. Now, this is a sneaky one that catches a lot of people out, especially if a client pays you something for your mileage. Let's say they give you 35p a mile. The wrong thing to do is just claim the 10p difference as an expense. What you should do, the correct way, is declare that 35p a mile as income and then claim the full 45p as a business expense. The final number on your profit might be the same, but this way your books are clean and correct for HMRC. Right then, we've gone through the process, the rates, and the pitfalls. So let's wrap up with some clear, actionable next steps so you can take control and make sure you get this right. Okay, and before we go any further, here's the important official bit. Please remember that everything we've talked about today is for general guidance. Everyone's tax situation is different, so you really shouldn't use this as the only basis for your financial decisions. And that's exactly why, before you make a final decision, you absolutely must speak to an expert. The team at My Tax Accountant are fantastic, and they're the ones who helped us put this guide together. For advice that's tailored specifically to you, give them a call on 0208-570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. And if you're the kind of person who likes to read all the details, they have an absolutely brilliant, in-depth article on this very topic on their blog. You can find it by heading over to mytaxaccountant.co.uk/post/mar on self-assessment. So there you have it. The bottom line is, with just a little bit of good record keeping, you can stop leaving your hard-earned cash for the tax man. So the question I want to leave you with is, now that you know how it's done, how much could you save on your next tax return? Thanks so much for watching, and if you found this helpful, please do subscribe for more expert guides like this one.